Welcome, welcome. This is Nadine, Realtor ATX, and as promised, Lana Horak from Model Mortgage is back to discuss, you guessed it, or did you, reverse purchases. As I mentioned in the last video, guys, I had heard of a reverse mortgage, but I never heard of a reverse purchase until someone I had spoke to about selling their home discussed that they were already in the process of getting one, and I was like, what is a reverse purchase? So I immediately called Lana, and I'm like, Lana, what is a reverse purchase? And Lana was great, and she went in and dug deep, and she got us just a ton of information on this. Really, I think this is even more unknown than a reverse mortgage. So let's dig in, because it's not all a bed of roses, but it's pretty darn good.
Well, it's certainly an option. And so as you mentioned, many people will have heard about reverse mortgages, but not many people know about reverse purchase. And to keep it simple, what a reverse purchase is essentially combining two transactions into one. So buying a home that comes with fees and taking out a reverse mortgage, which also comes with fees, but paying closing costs once.
That sounds very good.
Now the borrower has to pay the difference between the what they can borrow and what the purchase price is and closing costs. So down payments tend to be quite high, 50% plus in most cases. And of course there are no monthly payment obligations, no principal and interest mortgage payment, but the borrower has to fulfill the standard reverse mortgage requirements around living there, maintaining property taxes, homeowners insurance, etc.
The key here to me sounds like we need a huge amount of equity, and maybe even just outright owning our property to really make a reverse purchase attractive, because we need to put down, depending on the house, about 50%.
Correct.
So that's a huge amount of money.
Yes.
Okay. All right. So now, no payments. All of that sounds great, and I think you and I discussed a little bit about why would somebody do this? Like, why? What would cause me, besides the fact that there's no payment? But I think you brought up a great point about just downsizing. So maybe we could just talk about that a little bit. Like, why would we do this? What would be the reasons why we might do this?
Well, it would allow somebody 62 years old plus to upgrade versus downsize. And that might be necessary if your clients would like to retire somewhere where home prices are higher. Maybe they would like to relocate to be closer to family, and they happen to be in a pricier area. And then it has the benefits of the reverse mortgage of they are accessing the equity in the property as a line of credit if they choose that option. There are no monthly payments. So usually it's great for people who would be already buying with a sizable down payment or even considered paying cash outright.
So that makes sense, and it's really interesting that this is even allowed. So it seems like such a treasure chest, that I could, maybe even move to Tahiti, and get my dream home, and live that life that, kind of after all my years of work, I get to live. I mean, okay, so let's talk about the kinds of properties that this can work for then.
It works for single family units or 2 to 4 units, as long as the owner occupies at least one. So
wow, so I can get investment property, so you could even make some more money. Like, I mean, so maybe I could buy a duplex, a triplex, rent those other units out and live in one, and that would still work?
Yes, it would. Also, FHA approved condos are fine. Manufactured properties with certain restrictions are okay. New construction. Now, repairs must be fulfilled by the seller according to appraisal. And the type of properties that are a no-go is it cannot be a log house or a farm or a dome. Also, no second homes or investment properties.
Okay.
So
unless you're living in one of the units.
Exactly.
And then you could make some money. Low passive income, I'm all about that. So, all right, so is qualifying for the reverse purchase the same as qualifying for the reverse mortgage?
In many ways. Also, it's very similar to an FHA purchase transaction. So there's no credit score involved in the qualifying process, but there's a financial assessment taking place.
And we went over some of this, a lot of it actually, in the other video on reverse mortgages. So I don't think we're going to get into all of that again. So definitely check that video out and get a little bit more detail into like some of the specifics of qualifying. But they are basically the same as the reverse mortgage.
Very similar as far as the financial assessment goes. Also, there are some guidelines around funds. There are no borrowed funds allowed, and except if the down payment proceeds are coming from the down payment is coming from the proceeds of the sale of their previous home or a business. Large deposits have to be sourced and seasoned for 90 days, so it's a bit longer than with other mortgage transactions. Gift funds are okay, and also an obligatory counseling session involved.
Okay, interesting. I didn't know about the obligatory counseling session. That's interesting. Okay. So, are there any unusual... Now, before we get into restrictions and features, because I think there's one element that we did on reverse purchase, reverse mortgage, we didn't touch on in the last video, and that has to do with the spouse.
Right.
Specifically, if you are married, what happens to the spouse? Do they get to carry on with that loan? Can you talk a little bit about that?
Yes. So the mortgage will become due and payable when the last remaining borrower passes away.
And that borrower has to be also 62 years and older. Is that correct?
Yes.
All right. So they also would have to be eligible for the loan in order for that to happen.
Yes.
Okay. Otherwise, if they weren't, let's say you married a younger person and they weren't 62, that loan would become due and payable. How would that work? Or would that person who is not eligible to under that program, would they suddenly be, and I think that's what I heard, that they would actually get the loan balance due notification.
Right. So they would be the non-borrowing spouse. I'm not sure.
Okay. Yeah, I think that I had read something about
I
that.
have to look it up.
That they would actually have to. It would almost be as if they were the heirs in the case of the passing homeowner. It would become due and payable, and they would have to go through the exact same way of dealing with it, whether they buy it, sell it, or deed in lieu of foreclosure.
I need to look it up and get back.
We might have to do a little follow-up on that. Maybe Lana can give me some information, and I'll just hit you guys up with a little follow-up on that, because I think that's really interesting. So are there any unusual restrictions or features specific to reverse purchase?
Yes, there is, and that's that there are no concessions allowed.
What does that mean?
So there cannot be any concessions coming from the seller, lender, broker, or agent, or any party that is involved in the transaction. So for example, no lender discount points,
Okay.
interest rate buy downs,
Okay.
no closing cost assistance, no seller concessions. That's very popular
Yeah, that is very popular.
in this market. No builder incentives, seller financing, gifts from parties related to the transaction. So this tends to be a pitfall because parties in the transaction are not used to this restriction, so they will try to work in concessions because
that's normal. That's
standard.
That's the standard. Yeah. I mean,
Yes.
we're almost
So-
wired to do that.
Mm-hmm.
We got to negotiate. We got to pay down some points. All right. So no concessions at all. So that's a big one, actually.
Something to be
aware of. Yeah. So the risks and the difficulties of the extra loan balance, the ever increasing loan balance, the closing, the compound interest that we mentioned, it's all the same.
Yes.
Here. It's the same thing. Basically, this is a reverse mortgage, but we're calling it a reverse purchase because the way you're coming at it is not by trying to stay in a home that you are already in. It's by buying a new home.
Exactly.
So, okay, so that's just to be clear. This one is all about you going out and finding a great home that you want to live in for the remainder of your life and finding a way to do that where you don't have to pay a monthly principal and interest. Of course, you will have to pay taxes and insurance as well as maintain your property. So that to the bank's satisfaction. I'm sure there's no necessary like inspection per se, but to just make sure that you're doing that, because if something does come up and the bank discovers that it is not maintained properly, they could foreclose on the property. So then, what alternative then could you consider instead of a reverse purchase or mortgage?
People could just straightforward downsize. They could sell their home and buy something that they can pay cash for.
Right, because if you own your home outright, then maybe it also makes sense if you're able to just pay cash for that home straight up, But then when you do pay cash like that, that cash is gone.
Yes, so the equity is then locked, and the only way for them to access it is to sell the home or to take out a cash out refi or another sort of home equity type of product.
But with that, you have to pay monthly.
Exactly.
Right. So with this program, with the reverse purchase, I mean, I think it can be, it definitely do your due diligence. If you're doing it for yourself or you're trying to help your grandparents or just educating your parents on something like this for them down the line, and for yourself down the line, just make sure you're doing your due diligence about all the fees, what it really will cost you, what really, if you really feel like the benefit is there. But I think if you own your home outright, this is definitely something that you should check into.
Absolutely. It doesn't fit necessarily everybody, and it's very important for clients to educate themselves and compare this option to other options out there, and then ultimately make a decision for themselves.
Yeah, I know that I immediately, once I heard about this, I immediately called my mom, my dad, told my children, my sisters. So I definitely got something out of learning about this. I hope you guys got something from this video as well. Thank you, Lana, for coming back, and just once again, doing what Lana does. She's darn good. She's pretty darn good.
Thank you.
All right, guys, hit me up in the comments with questions. Some of those questions may become episodes. Subscribe and never miss out on key information for your investment future. Remember, financial freedom is accessible. Let's get there together. Nadine, Realtor ATX, out.